Hey everyone, it's December 10th and the last Fed meeting of 2025. Here's a quick breakdown of what came out of today's meeting in plain English. So, first, the Fed delivered the quarter point rate cut that everyone expected, but here's the twist. It's being called a hawkish cut. Why? Because inflation has been ticking up slowly, yet they're still cutting rates. This is now the third meeting in a row with a quarter point rate cut. The next big update, starting December 12th, the Fed is going to start buying treasury bills, which are short-term bonds, typically maturing in less than 2 years. The only stated purpose is to build up their reserves. This is a dovish signal, meaning that they want to support or stimulate the economy. Think of it as a small, lighter version of quantitative easing or QE light. We also got the summary of economic projections, which includes the Fed's famous dot plot. Basically a chart showing where each of the 19 Fed members thinks interest rates are going. The majority of them don't expect any rate cuts in 2026, except one, Stephen Myron, who thinks there could be a total of 1.5% in cuts next year. The Fed's also expecting a couple positive trends for next year. GDP growth is projected to rise to 2.4%, while inflation is expected to move lower. They also aren't too worried about inflation from tariffs. Big picture, since September of 2024, the Fed has now cut rates by a total of 1.75%, but looking ahead, there's no real expectation of any rate cuts next year until June. This is a signal that they could be done with rate cuts. However, the fact that they're about to start buying treasury bills again shows they're still trying to quietly support the economy in the meantime. So what gives? Hence my video caption of these conflicting signals from the Fed. That's a wrap. Have a great day, everyone. Bye-bye.